region's business, improving our economy, creating jobs, and strengthening communities. Innovation, collaboration, transformation, and the people making it happen. Join us as we take a closer look at our region's business. Now, here's your host, Bill Flanagan.
Today on Our Region's Business, no better time than a cold January day to think spring. We'll find out why a booming market for recreational vehicles is creating opportunity for a manufacturer right here in our region. Plus, billions of dollars in upcoming construction is boosting demand for skilled workers, the focus of an upcoming showcase. But first, the stock market's been booming, taxes have been cut, and interest rates have been edging up. What's it all mean for the economy in 2018? Well, Gus Faucher is back with us. He's chief economist for the PNC Financial Services Group, which is, of course, a sponsor of this program. Welcome back. Good to see you again.
Thank you very much, Bill. Glad to be here.
Yeah, so let's talk a little bit about how things seem to be going pretty well right now.
That's right. We've got an economy that is expanding. Consumers are spending, businesses are investing, and the unemployment rate is low. So generally, conditions are pretty good. And obviously, we've been hitting record stock prices as well. So overall, things look pretty smooth right now.
Yeah, and what's really driving all of this, do you think?
It's a combination of broad-based growth, so it's not one particular sector that's doing well, but consumers are spending more because we have more jobs and higher wages. Businesses are investing because they're seeing stronger demand. The global economy is doing better than it's done in more than a decade, and so exports are up. Home building is doing well. Commercial construction is doing well. So it's pretty broad-based growth, and that's good news for the length of the current expansion.
Well, because it has been a really long expansion as expansions go.
That's right. This is now the third longest expansion in U.S. history. It's about 103 months. In another 3 months, it'll become the second longest expansion. So it hasn't been the world's strongest expansion. It's been slow and steady. But the good news is that means we haven't had a chance for imbalances to develop in the economy that would cause the next recession. And in fact, I think a recession anytime this year is pretty unlikely.
Well, that's good to hear. Yeah, well, the wrap on an expansion, if there is one, is that, hey, it's been great if you've been in the markets, if you've been running a business, you've been making more money. But at least to this point, it never really translated into more wages for the people doing all that work. Has that really begun to change?
We have seen a shift there. So if we look at median household income, so that's half of families earn above, half of families earn below, that's been growing pretty strongly for the past few years. We're seeing wage growth not just at the top end, but at the middle and in the bottom as well. So conditions are looking better, and I think more people are seeing the benefits of this expansion.
Yeah, and I even saw some recent statistics that African-American unemployment now is some of the best it's been.
That's right. So we're seeing pretty broad-based gains across demographic groups, across education levels, that type of thing. So the improvement is broadly helping, the entire population and not just the top 1% of the top 5%.
So all of this has been happening so far without much inflation and with interest rates still pretty darned affordable. Is that likely to continue?
Well, I think we will see interest rates rise. So inflation is actually a little bit below where the Federal Reserve wants it to be.
They actually want it to be a little more inflation?
Yeah, they want about 2% inflation. We're running about 1.5% now. But I do think that inflation will pick up as wages increase, and so businesses raise their prices in response. But I think what the Fed is going to do is they raised interest rates 3 times last year. They're going to raise them a few more times this year. So interest rates are going to go up, but it's going to be a very slow process. And interest rates during the current expansion are going to be lower than they've been during past expansions. So, I don't, for example, see the 30-year fixed mortgage rate getting much above 5%, which is pretty low on a historical basis. So I think that we're in a world of low interest rates now, even if they do move higher as the Fed raises rates.
Now, how much of an impact do you think the tax cuts, both for business and individuals, have on all of this? Has it already been priced into the markets?
It's certainly been priced into stock markets. So investors know that businesses will have higher profits after taxes because their taxes have been cut. But I think we will see a little bit stronger business investment this year, a little bit stronger consumer spending with this year. Pretty soon workers will see the effects of the tax cuts start to show up in their paycheck. They'll be deducting a little bit less, so that'll support consumer spending. Businesses will have more money for investment. We'll have businesses that have overseas operations moving some of their profits to the U.S., and so that's going to support business investment. So I think that 2018, we had a good year in 2018. I think 17, excuse me. I think we'll have an even better year in 2018.
So then, what are the risks? What could bring this party to an end, do you think?
Well, I mean, certainly certainly there are geopolitical risks. So the international situation is obviously very tense right now. You're concerned about what's going on in the Korean Peninsula. You're concerned about the possibility of trade wars. So the Trump administration has been talking about protectionist measures.
Lots of talk about NAFTA this week.
That's right.
It's going to survive.
That's right. And China has talked about reducing its purchases of U.S. treasuries. So there's international tensions that could cause a slowdown in the global economy, and that could spread to the U.S. economy. So certainly those are things to watch out for. But I think we are going to get a boost from the tax cuts, so that could offset any weakness that we might see.
Okay, so unemployment's already very low. Do we have enough people to do all this work if the economy keeps expanding?
You know, it's getting tougher. So when I go out and talk with business groups and I ask them, you know, how many of you are having difficulty hiring, about half the hands go up. So it's a pretty tight job market out there. You know, that's good news for workers who have been left behind by the current expansion, that there are going to be more opportunities for them. But we have seen job growth slow over the past few years as it becomes more and more difficult to hire, and that's going to be the case this year as well. That's not a bad thing. I mean, it's good that we have people, you know, a lot of people working, but it does mean that job growth is going to be a little bit slower than it's been in the past.
Interesting. What about for our region in particular? Kind of consistent with the national outlook?
Yeah, we've seen a pickup in economic growth in Pittsburgh over the past year or so. So we had a period of relative softness from, let's say, 2013 to 2016, where we are growing much more slowly than the rest of the country. But conditions have picked up. I think some of it's higher energy prices, and so that's supporting.
Yeah, we had kind of a lull there in the shale gas.
Yeah, that's right. And we're seeing a pickup there, so that's good news. We have the cracker plant, you know, underway, and so that's good news. You know, but I think we're going to have a solid year of economic growth. Pittsburgh's always going to grow a little bit more slowly than the rest of the country because we have an older population, we have slower population growth, but I think it should be a solid year for the Pittsburgh region as well.
All right, well, a lot to look forward to. Gus Faucher, Chief Economist at PNC, thank you so much. Appreciate it.
Thank you, Bill.
Yeah, Happy New Year.
Thanks.
And next up, how one local company packs a lot of recreation into a folding trailer. Stay with us.